As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. I'm delighted to introduce a returning guest tonight. We haven't had him on for some time. He is Craig Hemke, the founder of TFMetalsReport. He is a well-known commentator and blogger on the precious metals market and the state of the economy. He's here with us again on Reluctant Preppers, and just welcome back, Craig.
Donegan, thank you. It's always fun to get caught up. It's always fun to visit with everybody at your site, so thanks for the invite.
We'd love it if you could help our viewers have a little bit of an insider's look at what the heck is going on with the gold and silver market. Particularly, we've been watching with some interest over the past couple of months when David Morgan, for one, was expecting that we might see, and also we were hearing that from goldsilver.com as well, that there might be seeing a near-term bottom in the silver market and looking for things to take off about a month and a half ago, and then it just turned around and it's been heading down for the past month now. I had taken a position that now I regret, but am interested in still finding out what you are seeing on the precious metals, what's driving the precious metals prices, both in the most recent term, but also what do you think are the major factors that are affecting that on the broader term? Where do you think we're headed in the future?
Well, I think a lot of this year is all about this notion that the Fed has gone off on this course of raising interest rates, not because the economy suddenly is better. I mean, the economic conditions and GDP numbers and all that kind of stuff are all about the same as they've been for the entire time that they were in this zero interest rate policy. But all of a sudden, the Fed's hiking, and that's changing some of the dynamics and some of the math for some of the money managers around the world. And it leaves a lot of question marks. And that's kind of what the problem is with gold and silver at this point. Is people are unwilling, especially the ones that drive the price, that buy the COMEX futures, the gold futures and the silver futures, the derivatives that trade on this exchange called the COMEX in New York. You've got to have more buyers of those futures than sellers to get the price to go up. And at this point, there just hasn't been near the demand for those futures contracts as there was last year. And so we've got to kind of get some of this, I guess we'll call it uncertainty, economic policy uncertainty, maybe is a better way to put it. Get some of that behind us. The main thing, though, that your audience and may not fully grasp, and because certainly I know, the vast majority, 99% of the people out there don't grasp, and that's the fact that what's really trading, swapping hands back and forth to create a price, a discovered price, is not the physical metal itself. What's being traded are these derivative contracts, something that says that, at some date in the future, I'll give you, some metal. And the buyer of that derivative contract essentially saying, yeah, at some date in the future, I'd like that metal, but no metal ever changes hands. It's just an exchange of risk, financial risk. And so these futures contracts are traded with no real connection to the metal itself. And then the metal gets priced at that discovered price of these futures contracts. And what's funny about the whole thing is that the metal itself would seem to be abundant because of these low prices. But instead, what's abundant are these futures contracts.
Right.
The metal itself is scarce and has been levered and digitized and synthesized into all these different forms where people think they own gold, whether it's an ETF or whether it's a futures contract or whatever, but they don't actually own gold, but they have something that says it's gold, and so they accept it as gold. And I think the main thing that precious metals investors or someone that would consider themselves a prepper or a reluctant prepper, thing that person needs to understand is that owning physical precious metal in the world where we live and in the world where we're headed is really an invaluable thing. And there's really no price for it if you own it in your hands, because it is your financial protection. It is your financial insurance. It's also your insurance against any one of a number of man-made calamities that could come our way. It is something that could allow you to barter and trade in a world where, the ATMs are shut down, or in a world where, there's a renewed war or something like that. So the actual physical precious metal in your hands, they might say on CNBC it's worth, $1,220 an ounce for gold. But at the end of the day, because of the actual fundamentals and because of the actual value of holding that precious metal, it's worth a lot more than that.
And if you could tell us what you see is the broader picture of over the last month, we mentioned the price trending down. You said just today, I noticed today we broke below $16 on that paper price that is driving the spot price. But you said then you saw a flash crash just in the last hour here, and we're still doing some research into what's behind that. Had been alerted to that. How is it even possible for those kinds of abrupt moves to happen in something that trades like this?
Well, it's all one. Again, we're not trading actual physical silver. Okay, we're trading these derivative contracts, and they're traded primarily by computers. And there are no real human beings involved other than writing the code to begin with that drives the computers. And so, in kind of a breaking sense, as we discussed, had to have this conversation on Thursday evening, about an hour ago, there was a flash crash in silver, a true legitimate flash crash. Price was trading a little bit above $16, $16.05 or so. And in the course of 1 minute, volume spiked from, let me just tell you as I look at it, Dunnigan, in the previous minute, there had been 883 contracts traded. The minute before that, there had been 72 contracts traded back and forth. But at, 7:01 Eastern time here on Thursday night, there were suddenly, 8,429 contracts traded. More than were traded, between the whole hour of 8 and 9 o'clock this morning when the COMEX was open. And this is any one of a number of things, but we could say back in the day, we used to lay these things at the footsteps or at the doorstep of JP Morgan and some of the proprietary traders, and that could be this again. Could also just simply be a computer algorithm run wild, and instead of selling again 80 contracts, it sells 8,000. The result is the market moves down in stages. If anybody that's traded, let's say your listeners, maybe somebody went to buy 5,000 shares of some $3 stock before. You don't often get your whole 5,000 shares filled at $3. You get some at $3, some at $3.01, some at $3.02, as the price moves up to find more willing sellers. And that's what happened in this crash. It looks like about an hour ago. So there was just some big massive sell order that took price all the way down to $14.40. That's a 10% drop in a minute, until all the orders were filled. All the sell orders, whether it was accidental or on purpose, were filled. And again, this just belies the scam and the fraud of this pricing scheme. All of a sudden you get, 8,400 contracts. What's 8,400 times 5,000? Because there's 5,000 ounces of silver allegedly per contract. What is that, about 40 million ounces maybe? I'd have to do the math real quick. But nonetheless, there wasn't any physical silver that traded hands. Of course not. No, this is just a computer flash crash. Whether it was purposeful or not doesn't really matter. It happened. Price has since recovered some. But nonetheless, it just shows you the underlying fraud and the silliness of allowing the physical commodity to be priced off of the trading of these electronic derivatives. It's a scam. The banks run it for profit. The banks run it for, to build up confidence in paper currencies at the behest of the central banks. And one day it will end. You can't just continue to leverage 1 ounce into 100 synthetic ounces into 200 synthetic ounces. At some point, that confidence scheme fails as people actually demand delivery, want the real thing. But until then, this is the system that we're stuck with. And and I guess what it augurs for the listener is to recognize the economics, recognize the fraud of the system and how things are terribly mispriced and use it to their advantage.
If you could broaden out our perspective now beyond the recent price actions in precious metals and talk to us a little bit about the overall sector of precious metals, including the precious metals mining. We've had a number of opportunities to interview miners on our channel, and you've talked to us in the past about, and others have, we've talked to John Rubino, we've talked to David Morgan and others about how movements in the precious metals can be magnified or multiplied when you own the miner stocks, because you're actually owning those who can discover, develop, and produce more of that precious commodity. So do you have any principles that you're seeing at play in the affecting the miners and, affected by the overall supply and demand dynamics that are going on right now?
Well, to me, there are really only two reasons to own the mining shares. One is just greed, in a sense. They offer great leverage in a rising market. Like last year, we saw silver go up, let's call it 50% from 14 to 21 over the course of 6 months. But there were a lot of mining shares that went up 300%, 400% over that same time period. So you get great leverage by owning the shares. And if you're looking to make actual fiat cash out of the deal, turn $5,000 into $10,000, the miners will do that for you. There's also an argument that says, hey, I worry about, similar to 1933, I worry about the U.S. government coming in and wanting to confiscate my gold, but they probably won't confiscate my mining shares. So I want to own the shares for that. I still basically, and on balance, prefer the actual physical metal myself for many of the reasons that we've already discussed. But the shares are, after the market that we've been in for the last 5 years, the surviving companies are largely lean and mean. Done again. I mean, they've stripped down, cut as much any costs as they possibly can, and are now poised, should we get a rebound in price, to move up rather quickly, just as they did last year. But again, that's all going to depend upon a rebound in that price. And as long as we're under this paper derivative pricing scheme, those rebounds are tough to come by. You might go up to 1,400 and then go back to 1,200 and then go up to 1,300 and go back to 1,200 like we've been. And so that means you've got to kind of try to day trade them. You've got to be intuitive, and that's really hard to do because it's almost human nature to buy high and sell low. So the hard part in that then is timing it right, just as it is often with any investment. And so for a lot of folks, if you're going to own the miners, your best bet is just to do your research, find some analysts. You mentioned a couple that you can trust. David Morgan really does a great job. I've known him for a long time. And people like that, where you can trust their opinion, you can trust the nature that, they're just honest people giving you their honest opinion. And then what you do maybe is if you really want to own the shares, you pick a couple of good ones and you just hold on to them. It was always my experience back even when I was a stockbroker back in the early 90s, is that people are constantly doing the wrong thing. They wait and they wait. Like last year, a lot of folks, weren't buying the miners in January. They weren't, like we said, they weren't buying First Majestic when it was 3, but man, once it got to 15, they loved it. And then it goes back to 8. So it's really challenging to try to make money in the miners. And so you've got to, like I said, you've got to find some people you can trust, do your own homework, and then try to be as smart about it as you can.
Can we broaden the discussion out now even farther beyond precious metals in general and start talking about some of the geopolitical dynamics that you see playing out that you think are affecting people's real risk profile that they're facing? Our viewers want to be aware and prepared, and one part of that is preparing for real and credible risks that we face. So what are you seeing in the people that you've been discussing with, talking about as far as things that people may not be aware of that they should be keeping an eye on in the broader world?
Well, first and foremost is this renewed Cold War that has really been at a fever pitch now for a little more than 3 years. As I was studying this closely, have been studying this closely ever since what really was a coup took place in Ukraine in February of 2014 and all of the events that followed, leading all the way up to today, and the situation that we have not only still in Ukraine, but in Syria, and the loggerheads, where we find the U.S. and Russia facing off, and now being used as a cheap political tool, to try to take away power and prestige and legislative power, if you will, from the presidency, making it sound, and delegitimize Trump in the process. All of that's very dangerous. And so first and foremost, that's something we have to be concerned about. And I've been following the North Korea situation ever since my brother-in-law was in the Army and was stationed in the DMZ back in 1994. So I've been watching that closely and worried about something happening there now for 20 some odd years, and it never does, right? It's always been a situation where the North Koreans want something, whether it's a renewed shipment of grain or coal or whatever, or they put on this big act and then they get what they want and then everything simmers down. But this situation currently feels a little different, and it has ever since it flared up back right after Trump was inaugurated. And that, I think, is a real concern. I still would put the chances of, renewed hostilities. I mean, because technically the Koreas are still at war, right? They just they never really signed a peace treaty or anything like that. And that's held now for 64 years. And so it'll probably hold for 65 and beyond. But I think you have to be worried about it just in the off chance, because who knows how that eventually might play out. I can't imagine the deaths and the destruction in the first hour in Seoul and all throughout South Korea and North Korea would be on a level not seen since World War II. And so it's really hard to imagine something like that happening, but that doesn't mean it can't. And then there'd be, who knows what tricks the North Koreans have up their sleeves. I mean, they've got, anybody can pull it up and look on the internet. There's that satellite of theirs that's been up there for 3 or 4 years, flying in actually an anti-orbit. It's going in a different direction than all the other satellites. Maybe that's just a screw up. Maybe it was just all part of their nuclear tests, and learning. If you can put up a satellite, you can figure out how to put a warhead, into orbit and back. But nonetheless, who knows what that satellite's got on there? There's all kinds of crazy theories about that thing. So I think anybody that considers themselves aware and alert and prepared for what may be coming definitely needs to be paying attention to the geopolitical events in the world. And for anybody that's, a friend of your channel and is just kind of thinking about this stuff, I mean, the last thing you want to be is aware and alert, but then not prepared, because at the end of the day, if you're just sitting on your roof with a sign that says, help me, with everybody else, what good does it do if you're alert and aware? You've got to actually prepare for these events so that if things do happen, your family is protected and safe, and maybe you can help a few neighbors as well. So, I really encourage people, especially at this time, to be staying on top of the situation, because things can change almost overnight.
Along those lines of preparedness steps that people could and should take, everyone has their different emphasis and priorities that they bring to top of mind. When you think about your top 3 or 4 things that you think about personally, or that when you've heard others that you've talked with mention that they're making certain preparations and they've really struck you as, that's really one that I should put on top of my list. What are the things that really rise to the very top of your priority list in terms of preparedness actions?
Well, first and foremost, I think about water. Making sure that I have access to clean water, that my family has access to clean water. One of the sponsors, not sponsors, I shouldn't say that, but one of the great affiliates that I have on my side is the Berkey water filter people. That's something probably, I don't know if that's an advertiser of yours or not, Dunnigan, but they're a great company, and they make these great water filters. You basically turn pond water into something that you can drink. We own
a Berkey, but they aren't an advertiser. Maybe I should talk to them about that.
Yeah, they're a great affiliate, by the way. I mean, anytime anybody uses one of the links on my site, they immediately credit me a little bit of commish, which is nice. But I promote them regardless. I think number one, first and foremost, I mean, you can do a lot, but you got to have the water, no doubt about it. So that's there, any food preparation that you can make, anything to make you sustainable. I just got back, actually, as an aside, I had a family vacation. I was in Hawaii for a little while. And when I was in Hawaii, one of the locals told me that the island of Maui only has enough food for 7 days. 7 days. I mean, there's 300,000 people that live on that island. What if they're somehow isolated for one reason or another? 7 days.
Even recently, the bridge that got knocked out in Big Sur, California, and basically almost cut off the population there from the outside world. Things can happen that can really disrupt the ability, to replenish supplies, and it's absolutely critical to be able to think about what's beyond the just-in-time supply chain. What's next?
That's right. And so that leads us to the final, two elements of what we'd call the big four: food, water, right? Water first, then food, but you also have to have some way to protect yourself, because there's going to be a lot of folks that aren't prepared. And if there ever were any kind of anarchy, you want to, keep the crowd moving from your location. That would probably be the best way to do it. And then lastly, if you do need a way to exchange, some means of exchange, excuse me, for goods that you and your family might need to survive, having physical gold and silver is still the best way to do it. Whether your cash will be taken, certainly your credit cards may not be usable. Your Bitcoin may not be usable either. But gold and silver have been money for thousands of years. That would be the time, again, as we talked about them being invaluable. Boy, that would really make them invaluable in a situation like that too. So that's the big four: water, food, ammunition, and then something to use in barter, preferably gold and silver, physical gold and silver.
I was going to ask you about cryptocurrencies, not only because they have been a hot topic recently, but because people have curiously pointed out that even though they could arguably be pointed out as one of the most virtual forms of currency out there, that they've been trading more the way an unmanipulated market might, in the way that, for example, the silver market might if it weren't manipulated. Can you weigh in on your view, first of all, of the viability of cryptocurrencies beyond this sort of flash, passing fancy interest that they've recently garnered? What do you think are the real driving factors that are driving that interest? And do you see them as, Andy Hoffman has described them as allies together with gold and silver against fiat and the manipulations of debt-based currency? So one at a time, what's your opinion of their viability in general?
Viability in general, as long as the grid is up, right, then they're fine. And I think of them as any other speculative investment. Obviously they're money because you can transact with Bitcoin and buy and sell things on the internet. So they do function as money, but if any more than anything else, they're an investment. They're a speculative investment. If you bought some Bitcoin at $500 a Bitcoin and now they're worth $2,500 a Bitcoin, you've made money in terms of what the dollar value of them has grown. Excuse me. So they're viable in that regard. And they are allies in getting people to be aware that money is not a dollar bill, right? That there are other media of exchange, Bitcoin being one of them, but that gold and silver have been money and stores of wealth for millennia as well. And I don't know, what is the future of Bitcoin? There probably is an enduring future for them, but I certainly don't see them as something preferable to gold and silver, or something that I would, give up gold and silver on just for Bitcoin. You mentioned the fact they've moved up freely. Yeah, that's, why? Because Bitcoin is a simple supply-demand story. It's like if you had to actually price an ounce of silver off of what are you willing to give me? I mean, here's my 10-ounce bar. What will you give me in cash in exchange? That's one thing. When you price physical silver off of the whims of the computers, you get flash crashes like we had earlier tonight, right? I don't think Bitcoin can replace gold and silver in any way, but it is enviable in a sense that they have moved up because they're not under control. There aren't synthetic forms of Bitcoin that are out there. There aren't derivatives of Bitcoin that are traded. There aren't the same tools that the banks use to control the price of gold and silver they don't have in Bitcoin. Now, on the one flip side of that, done again that I think is interesting? Gold and silver investors, we mainly buying this stuff for protection and insurance, and we all want it to go up in value, if anything, just for the, there's kind of a virtuous cycle of feeling a little better about things and better about yourself if you see the dollar price going up. But man, oh man, if an ounce of gold went from 3,000 down to 2,000 over the matter of hours, like Bitcoin has done a couple of times, oh my gosh, people would be suicidal on my site, So in some sense, it's kind of nice that gold and silver isn't as volatile as Bitcoin and Ethereum have been. But anyway, I do think there's a place for them, and I do think they're allies, at least if anything, in increasing awareness to alternatives or an understanding about, this debt-based dollar system is slowly killing all of us. And so we've got to start planning ahead as to what might come next. And so awareness of Bitcoin, at least if anything, kind of helps that process.
One of the questions that people always ask when we ask for them to submit viewer questions before having a guest is any awareness of the major factors and timeline towards a potential catastrophic collapse of the financial system. Most recently, we had Rob Kirby on, and there was a viewer question asking him if he thought that the system would not be allowed to crash by the powers that be as long as President Trump was in power, because he would refuse to bail them out. And I wonder if you could weigh in on any awareness or discussions that you've been part of that would give any illumination of a timeline to a collapse or the major factors that would be sustaining the system and preventing a collapse, and whether any of that has to do with the Trump presidency.
That's interesting that you say that, because, a lot of folks early on, right after Trump got elected, were saying, and I'm not saying Rob was saying this, but you see the stuff on the internet, people saying, the system is going to collapse so they can blame it on Trump, so it kind of goes full circle. I don't know about that one way or the other, but I do think the system still is kind of a zombie system. The central banks of the world have propped up all of their member banks, the too big to fail banks, and tried to re-liquefy and shore up their balance sheets by exchanging perfectly good brand new money for these worthless securities that all these banks sold each other back and forth back in 2006, 7, and 8. The banks still, on balance, if they had to price those securities that they still have on their books at the market today, would be insolvent. But due to accounting law changes back in 2009, they were able to price them to what we call maturity, assuming that they have a value when they mature 25 years from now. And so the banks still, again, in large part are, I guess zombie is really the best word, living dead, whatever, but they give this appearance of being healthy. So I think for anybody, if they're looking for a signal that, oh boy, here it comes again, the tsunami is coming ashore again, and this time it's going to be 10 times worse, just pay attention to the general health of the banks, particularly in Europe, where the banks are kind of linked together in a daisy chain of risk. One bank will own a whole bunch of bonds and, debt from another bank, and then that bank will own a whole bunch of debt from another bank, and they're all linked together. So if one goes under, then that'll create a call from another, which will kind of set off a whole chain of events and bring the whole thing down. And so that would be the thing to watch if you're, curious about, oh my gosh, is this beginning again? Just watch the banks. Something like that could easily spread here into the U.S. as well. That will be your cue or your clue that things are about to get ugly again.
Yeah, that happened directly and immediately in my family. We had been talked by our broker into moving our cash portion of our brokerage account out of FDIC insured money market and into a money market equivalent fund called the Reserve Fund, which was supposed to give you 1 to 2 day access to your funds. After the crash of 2008 happened, our account was frozen, and our viewers have heard this one before, but we weren't allowed access to our funds, and we never did get all the funds back. We got it back in little pieces and parts, but the reason was it was that fund, which was supposedly, money market equivalent, holding the value of the dollar, et cetera, was collaterally damaged because on the backside they were invested in Lehman Brothers, and Lehman Brothers collapsed, and they got hurt by that way. So you may think that you're doing the safe, prudent, responsible thing with your money, but you have no idea what the bankers are doing with your money behind their closed doors.
That's exactly right, my friend. I couldn't have said it better myself. and that would be the thing to watch.
Well, I've still got the scars right here.
Yeah, no, I was my commodities broker back in the day, in 2010, 11, when things were really going like crazy, was MF Global. It started out as Lind Waldock and then became MF Global, and John Corzine ran it into the ground, and where I woke up one morning and all of a sudden all the cash I had was gone because Corzine had taken it. And so, it can definitely happen. And it's, it's not something, where you got to worry about it happening tomorrow, right? So you'd like to think if you're paying attention, you'll see the signs and get the warning signs and be able to get out first before everybody else, before your money market does get shut down, and locked up. So it definitely should not be, nobody should be complacent. Nobody should be whistling past the graveyard thinking, hey, everything's great. Didn't you see Kramer on TV? He said so. It can be held together. It's been held together a lot longer than I thought it would. If you went back to 2009, I'm not sure I thought would have made it all the way to 2017 without another collapse. But that doesn't mean that the system has been fixed or changed or anything like that. And so it definitely augurs everybody still pay close attention, really on a daily basis.
Well, Craig, with all of the research that you do on an ongoing basis and the interviews that you participate in, if there's any additional thought that you'd like to leave our viewers before we wrap up tonight, what's one of the things that you want to make sure that people are thinking about that they may not be hearing on the mainstream news or from conventional sources?
I'm just going to go back to my primary topic that I've discussed, Dunnigan, for whatever it's been, 7 or 8 years now. And that's just the gradual continual acquisition of physical gold and silver. I just think nothing is more important. One, from a financial standpoint, because it's woefully underpriced. Again, as we said, what sets the price is the trading of these derivatives, and the banks can create as many derivatives as they want. But for the amount of actual physical metal in the world that backs up that derivative system, once that system fails, then we'll finally get some true price discovery based on how many ounces there really are in the world. And it's not going to be $16 for silver, and it's not going to be $1,200 for gold. So from a financial standpoint, it's a great opportunity. But as we said, it's also financial protection. It's financial insurance, has been for millennia, and it will always be so. And so that would be the one bit of advice I have for people: not to give up ship, not to say, hey, gosh, this gold hasn't moved for 4 years. It sucks. I want to get rid of it and go back to owning dollars. And just hang in there. The fundamentals haven't changed. The banks are still in control, yes, and sentiment is poor. But now is not the time to give up and go searching for other investment, because no other investment can do what physical gold and silver can do in terms of financial protection should the next calamity come ashore. So that would be the one bit of advice I'd have is just not to give up just because the price has been stagnant for a couple of years. Hang in there and understand why you own it. Understand the rationale behind owning it and behind buying more, and then act accordingly.
Well, Craig Hemke, if people want to find out more of your work and some of the newsletter articles and so on that you produce, where can they find you?
The site has been around, Dunnigan, now for, like I said, about 7 years. TFMetalsReport.com. I do some stuff every day, write reports in the morning and podcasts in the afternoon. For all of that, there's a slight fee if you want the stuff that I do. It's $12 a month, so it's not like a deal breaker. But the site, too, though, is populated by a whole bunch of folks that kind of see the world the same way, see the same way I do. And we recognize we're all in this together. And the real value in the site is the site itself, the people that hang out there. So I'd encourage anybody to go check it out, see if it's a place you want to be a part of. Again, TFMetalsReport.com.
Well, Craig Hemke, founder and host of TFMetalsReport.com, thanks once again for joining us here on Reluctant Preppers.
Dunnigan, it's always a pleasure. All the best, my friend.